One growing theme that's been dominating the headlines, and that's 5G technology. The technology promises to revolutionize the way we communicate. It's even garnered attention from President Trump. And there's a handful of ways investors can buy into this trend already. It's not even here, but we can buy into it using ETFs. Let me show you one. FIVG here. So you have, it's called Next Gen Connectivity ETF. This is a brand new ETF. Last week came in here. Data and Infrastructure Real Estate ETF. You can flip this around, and rather than playing the technology, play the real estate around it. Ticker symbol there, Server, SRVR. Chris, what do you think of, is it too early, or these names, again, we always put up the largest holdings here, but these are names we know, Skyworks and Finisar and Ericsson, for example.
Sure. I mean, what we're looking at here is where the 5G technology takes all the opportunities. A lot of what we were talking about today, a lot of the disruptive opportunity will come as a result of 5G taking shape well, globally, really. And so these ETFs that are levered to 5G technology are looking to be on the leading edge of the 5G revolution. So the names that are in these indices are going to be the names that bring 5G to us. And then I think the next iteration from that will be ETFs that start to isolate the companies that are going to benefit the most from 5G technology coming to market.
Hardeep, does 5G have a place in the Goldman Sachs Motif?
Absolutely. It's in our data-driven world under the data infrastructure piece, but there are also spillovers, right? It's going to affect Internet of Things. It's going to generate massive amount of data. You're going to need more AI. You're going to need more attempts to keep it secure. So every part of the data innovation cycle, 5G being a good driver, but absolutely it's captured in the...
You mentioned it's tough to generate alpha these days, yet you come in with all of these great ideas, a different way to slice and dice the world. You've got massive machine learning and algorithms and data mining going on, and yet even you admit it's tough to generate alpha. Why is that?
I think it's because we're all looking at the same data sets. Data is the new alpha. That is exactly what's happening in Silicon Valley. There is a gold rush looking for interesting data sets that haven't been priced into the market. If we look at the same data, I mean, if you think about humanity, we created 90% of the data in the last 2 years, and yet we tend to look at limited data sets. So we think looking for new sets of data with high signal is something that's been practiced, but we've never brought the human insight and the data machines working together.
You know, John, it's a great point, because they do the same thing now. I mean, if you're doing technical analysis and you're going to move on the 200-day moving average, and the S&P drops below the 200-day moving average, and everybody gears their investing around that, and they say, I'm going to take 10% off the table if I drop below. We saw this happen in December. It actually happened. The S&P dropped below the 200-day moving average. All of a sudden, the Dow plummeted and the S&P plummeted because obviously people had circled that. So going to his point, if you're using a limited data set, here in this case is one, you get everybody acting in the same way. So how do you get people looking at different?
I think you want to take the human emotion out of investing. So I'm definitely in that corner in terms of like being data driven, very quantitative. I built my firm around that premise. So yeah, I agree with what you said.
You know, and I guess the question, Chris, is how that affects trading. I mean, you saw in December what was going on. I called you at one point in December. It's mentioned, what the heck? S&P 500 drops below the 200-day moving average, and all of a sudden the thing falls apart. And he said, your point was, Bob, a lot of people are just pegged to this right now. That's the problem when you have a limited number of people, a limited number of ideas that are out there.
Yeah, I mean,
and I guess what I'm trying to figure out is how do you get more alpha? How do you generate more ideas that are not pegged to everybody else's ideas? And you seem to be saying that's hard to do now because everyone sees the same thing and their data comes to the same conclusions.
Absolutely.
I think a lot of it is don't chase the crowd. I mean, be unique, be individual, do your homework, and if the crowd is going against what you believe, stick to your convictions. Yeah. And I think that's where true alpha comes from. It's going to be people taking some chances, taking some risk, and sticking to the fundamentals.
I like what you're doing, Hardeep. You and I have been talking about 10 years about motifs and stop buying industrials and retail and think across sectors. And that's the way to generate alpha. I think your time has come. I don't know if you can conclusively prove you can generate a lot of alpha, but it's certainly an idea whose time is upon us. And you finally have the machine, the ability to read the data that you've always been talking about, too. Lots changed in the last 10 years.